have an emergency in the banking system, and Michael Burry is going to take advantage of it. Actually, he goes on to say, you have no idea how short I am. Well, I Googled it. It says you're 5'5", but I'm not buying that. And it was just updated November 11th. Look at this. Here we go, real quick. Michael Burry, male, 51, San Jose. He's American, and he's 1.7 meters. So I guess that's very far to swim. He's also straight and single. So single means he's probably rich. But the banking system is on fire. They are hiding things from you. Shocker, on fire in the snow. That doesn't make sense. Here. There we go. That's better. Banks, they are hiding all of this stuff, the shenanigans that they do. It's almost like an FTX moment. But I have bond friends that go like to read those kind of stuff, and they're like, look at that, like macro and reading things, and I'm like, yeah, how do I boil this down for my audience in under 5 seconds? So give me 10 seconds and I'll tell it to you in a story. You know, I have kids, and you say, hey, make sure you clean your room because it's a disaster. There are clothes like they're crawling over it. Okay, they're playing like snowball fights with socks. Oh, they're all in here, and you're like, clean it, and then in 5 minutes they come out and they're like, okay, I want to go, I'm gonna go play, and you're like, there's no way. You go in there perfectly spotless. You know, one of three things. One, it's all under the bed. That's what the banks are probably doing. Two, mom's going to have a lot of laundry to do. Or three, go look at the front yard, and that it will explain why the window is open. But coming in from a CEO that has billions in the industry, big banks, quote, don't have any liquidity. Right. That's because money is expensive right now, and the Fed has dried it all up. Warns of what? This is a good thumbnail right here. Impending national liquidity crisis that everyone has been telling you about, including myself. Money, which this is not, that's not money. Money is created in the banking system, 98% of it. It's all poof, magical pixie dust. Wow, that was a Freudian slip right there. Sorry, YouTube. My apologies. But for those of you that are new to the channel, oh, thanks for being really new. Appreciate that little click there. Money. Banks just have a ledger. They write down a ledger and they have nothing in it. And they're like, oh, you want a loan? $1 million? Okay, they write down $1 million. And they get out a sheet of paper, they write 1 million, hand it to you. And they're like, make sure you pay it back with interest over 30 years. That's how money's created. Never even existed in the first place. You have things like bonds, lots of different ways of money. Bonds, T-bills, and they call that pristine collateral, so they can drive the most gigantic bomb in the world is called the derivatives market, which is the quadrillions. So they're like, okay, we're going to take this, quick rabbit hole, and we're going to create quadrillions, right? And make a whole lot of money until you figure out, oh, that's what money, and then you figure out how to make money, which it really isn't even money, it's just fugazi. But then you could buy the things that you want. So when politicians come out and they're like, we're going to pay off the national debt, that's like, we're going to pay off money. When the Fed swaps bonds and all of a sudden, poof, they just disappear. You see it when it rolls. You're like, wait, where did it all go? It's gone. It doesn't exist anymore. You just destroyed money, which is debt, which makes no sense. I get it. If it was, I would, on my island, no. Gold, silver, have some Bitcoin. Higher fees, though. A lack of liquidity has widened the gap between investors buying and selling treasuries. Hey! See, what you just learned, I scaffold as a high school teacher and a college professor. We scaffold, and so I teach you that, and then we can go to this article, and you're like, oh, so you create that sheet of paper, and that's money. Why is that money? Well, I just explained why. Creating big swings in bond yields. Now I have to explain bonds real quick again. Your government writes down on a sheet of paper, bond. Anyone want to buy this bond? No, we don't believe in it. Okay. So then yields go up. That means your interest rates go up. That's kind of what happens. That's why the housing market is collapsing. I'll go into that. So yields go up, bond prices fall. You can actually buy this bond. And this is a steal of a deal. You will probably never see this again in your lifetime. I could be wrong. What do I know? I just have indicators. More than likely on TLT, which I took out that trade at the worstest time ever. This was a Head and Shoulders, and I even showed it to you. I'm like, hey, I'm going to take out a trade it was actually in the green, right? Which is pretty low, but if it plays out, also my bond, no, it's not a bond course, but I teach you how to trade bonds. And at my bear market course, I screwed up yesterday. Cause I still only had limited codes and the prices are going up and you guys are emailing me like, I waited and I can't get it. So I only have 2 more videos and then the price goes up to $300 and I might even knock them out today. So please grab it. This is it. It's a no-brainer. And you could learn and not be an idiot like me, even though you're like, what are you doing, idiot? It's like this is where you take out a short position, right? That was your price target, right there. Okay. That's it. Also a double bottom. I think that's it. This is probably the lowest you will ever see it in your lifetime. I could be eating those words because I thought this triple bottom here was it. But that was actually a left shoulder, head, right shoulder measure. And then it just said, bye. So my investors in the audience, which in my bear market course, I teach you, like, if you're an investor, this is your buy zone and you just buy and hodl. I personally like to trade. I like taking out a short there, taking 50% of my position there, and then the rest there. And then I turn around and I buy there. Also for my swing traders on the monthly, ding, ding, ding. And yes, in my course, I teach you how to turn on indicators. I paid someone to create them. So on the monthly, your buy indicator came on. That would be 1 candle close above. It's early in the morning. I have not been drinking, and I did not drink last night. Above the Bravo 9. I know that does not look like a candle. It's a line. If I were to turn candles on, you would see it. So that is your entry point. But what doesn't make sense is what the Fed is doing. But you have opportunities. You don't have these kind of swings in markets without the glory of the Fed destroying everything and wiping out the middle class and making the smart like you richer. And then you can buy things that you want, unless you don't. And then just go back to your job. Ben Miller, who oversees the real estate crowdfunding platform Fundrise, believes that the U.S. economy is headed for a potentially, this is my thumbnail right here, catastrophic liquidity crisis. We're already in it. Totally. You see it everywhere. Plays out in crypto, you name it. I mean, the volume on Bitcoin is like, hello? Anyone in here? Banks making real estate loans cannot cover interest rates that have doubled. Oopsies. So for those of you that are like, should I get out of my house? No, you should have subscribed, should have liked the videos at least over a year ago. When did I think I got that one pretty close to the top of the market in California, sticking it to right up Gavin Newsom's Newsom, which you probably don't want to go there. It's like stepping on a rusty needle. The natural instinct. Wait, let me just pause this. You have non-banks, like the Rocket Mortgage, those guys. Bye-bye. Because how they're borrowing on one end of the curve and then loaning on the other, but now the curve's backwards. So they're all going, man. They're all just like treading water right now. Please, Jerome. They're all emailing. The natural instinct is to look at the borrower as the source of defaults. But there are circumstances where the borrower doesn't default, but the intermediary lenders who have taken the loans and levered them up will eventually default. Yep. Whereas rich people with a lot of money will say, we just kind of wait for the tides, right? Where it rolls out and you're like, wow, everyone's naked. You see, whether it's the housing market, crypto, the stock market, all of these things too, the economy, it takes time. So just give the dumpster fire, you're like, what does that smell? Oh, it's a fire. Wait till this thing really gets going, which once you throw the match in the forest, which the Fed already did, they're not going to be able to put it out. It's just going to rage. Even when they reverse, that's still not going to work. And everyone's going to be like, this is the bottom of the stock market. It won't be, because you subscribed, you saw all the charts that I've given you every time the Fed pivots. Nope, didn't work. Just in case you're new and you want a refresher, look, screenshot every time they pivot. Didn't work. It works eventually after they pivot and you still lose 58%. But now moving over to Michael Burry from the Cite Your Sources Bravo New York Post. Why? It's like plastered. He's saying market has no idea how short I am, which here, There's no way he's that short. Is he really? He's not that. Now I have to warn you, because this is in the video where like, you said the stock market's going to crash. You even, no, Michael Burry, like this is not me. I play it different. I swing trade. I get in, I get out. There's no hodl here, especially you guys, your short positions. I've never seen them go back to baby Jesus in the manger. There has never been this many shorts. Also known as the put-call ratio. So take a look. Let's go, you guys want to go 5-year and see, look up there. This thing is off the charts. Also known as the put-call ratio, which was, so this is, I went into the max, was hitting its head on 1.5. But you know what? We have some good news. Strike that. We're down. We're down to 0.61. Let's short this thing. But then get ready to long it when it goes up there. That's why I swing trade. It goes up, it goes down. Where's the market going, Bravo? Both. But now back over to the banks. Sorry, I'm going back and forth because I can. Whatever. ADHD. Mortgage market upheaval spurs $17 billion in paper losses from the banks, and they're like, oh, where do we put these? Hide them somewhere. So let's hide them. Do they say? Do they use the word hide? No. Unrealized losses. I like that. All right. We're getting to the end of the year. We're gonna be seeing a lot of those. Oh, this article was gifted to you. Oh, thank you. Sorry, I need to log in. Unrealized losses will hinder banks' efforts to boost capitals. Buybacks will probably remain on pause amid capital headwinds. But yeah, we have these $17 billion in paper losses. This is not good. We have the banks hiding things. Those are not good shenanigans. We have the other banks, crypto, going down. No volume, no money, no capital, no pristine capital. Fed still tightening. Markets never bottom. Your little beauty pageant that you call a stock market. You don't have anything there. You have nothing to trade with. The Fed needs to reverse. They're not, because the whole world hasn't burned down yet. So we're not there yet. But like always, I love you guys. Have a blessed weekend or week whenever you're watching this video. And I will see you tomorrow, because I work every single day of my life. And is there a speech coach out there? I'm struggling over here. See you tomorrow.